This is Six African Trade Talks. Six African Trade Talks is a media partner of Intra-Africa Trade Fair, an initiative of Afrexim Bank in collaboration with the Africa Continental Free Trade Area Secretariat and the African Union. In this episode, our guest is Marcus Watson. Marcus is a partner and investment director at Kawi Safi Ventures. Marcus, welcome to Six African Trade Talks. How are you?
Good morning. I'm really good, thanks. It's a pleasure to be on your podcast.
So Marcus, tell us a little bit about your career journey.
Sure. So I'm originally from the UK and I've now been based in Kenya, working across Africa for the past 12 years or so. But I started off my career as a lawyer in London. So that was around about 2006. So it was an interesting time to be working equity in Europe. It was a real boom time, a lot of leverage buyouts. And then things crashed down in 2008. And we ended up working on a lot of restructurings of the transactions that we had previously worked on. So restructuring debt and reorg of corporate groups. I moved from the legal field in 2010. I went to do a master's in international relations and economics. That was at Johns Hopkins SAIS. So that was in Washington, DC, really to move into a career in private sector development broadly. I was motivated really to end up working at the World Bank. And so out of that master's, I did end up working with IFC, which is the private sector investment arm of the World Bank Group, and did that for a few years. But I was really looking to move into the emerging markets where the World Bank was investing. So I was looking for opportunities to move out to East Africa, and ended up taking a job with an emerging markets advisory group called Dalberg, and stayed there for 8 years. And I was a partner in their Africa advisory business and led the firm's energy and environment practice, and really started to build an interest in renewable energy and in climate change and solutions to tackle the issue of climate change. And then 3 years ago, I moved from Dalberg to where I'm currently working, which is an investment fund platform called Kawi Safi Ventures. So Kawi Safi in Kiswahili means clean energy. And that was really the motivation to set up the fund management business, investing in renewable energy and distributed energy business models across Africa. And we're now expanding our investment mandate and investing in other sectors, including ag tech, electric mobility, and carbon and natural solutions to climate change. So that's where I'm currently working and making investments in companies across Africa.
Interesting. What a journey. Any lessons that you could share that could help someone that wants to invest in Africa based on your experience so far?
Yeah, a lot of lessons, and I'm definitely still learning and developing insights into the space. But I think if you look at renewable energy in particular, it's been an incredible trajectory over the last sort of 10, 15 years. You've seen the costs of LED and solar panels decline significantly, more than 10 times in that period, really making the technology more affordable to businesses and to households. And then the other trend that was really critical for Kawi Safi's first investment fund, which was focused on renewables, was the rapid accessibility of the smartphone or mobile phones more broadly, and then mobile money enabled services. So to be able to make small and incremental payments via the mobile phone. And what that enabled the companies that we've invested in to do was significantly reduce the upfront cost of renewable energy technology for a low-income household or for a small business, because they, instead of paying several $100 or $1,000 upfront for the technology, in cash, they can essentially pay in small incremental payments over a period of time on finance. And we've invested in a number of businesses that both provide technology on finance, on credit, but also businesses which provide the technology backbone to enable others to do that. So we've invested in a company called Angaza, who provide the mobile money backbone for pay-as-you-go renewable payments, and they integrate the product seamlessly between the mobile network operators and the energy service providers and the consumers, so that these payments can be made and the data can be tracked, enabling the technology to be made available to all sorts of new households and businesses. So I guess I go into detail on that just to say an insight there is really identify some macro trends, which could be the increasing competitiveness of a particular technology and availability of technology, software, fintech type solutions that make that technology more affordable and accessible, and try to invest in businesses that are harnessing those trends over the long term. So try to take a long-term view, especially when you're investing venture equity, which is the type of investments that we do. You're really looking to become a long-term partner with the entrepreneurs that you're backing. So identify those long-term trends and harness them would be a key insight.
Interesting. I've been involved in LP gas in Zimbabwe. What actually made me see how things were evolving was when I attended a conference on LPG in Nairobi at, I think it's Safari Park Hotel. It was quite eye-opening. So you being in East Africa, where there's the M-Pesas and the likes, is quite interesting. And here we are in South Africa. I'm currently in South Africa. There's huge load shedding issues, but I haven't seen the same level of innovation in the energy space, what's happening in East Africa. So a lot to learn from there.
Yeah, absolutely. I think East Africa has really, with the growth of mobile money and the fact that sort of 90% or more of the population now have mobile phones, and a really high majority use some form of mobile financial service. That's made them a leader in this space. And it's promising now to see these types of solutions take hold in other regions across the market. So at Kawi Safi, we're now investing and looking for entrepreneurs to back across the continent. And we've got pretty strong pipeline in West Africa, East Africa, and Southern Africa as well. So I do think we're starting to see more, I guess, sort of technology and business model transfer, if you like, from one region in the continent to another. And I think that's a really positive development.
Certainly. That takes us to the next level of question. What has been the lowest or highest ticket price, or how much have you looked at investing, or what do you look at investing, and the process for entrepreneurs to go through accessing funding from you guys, and the timelines as well?
Sure. So our smallest ticket has been $500,000, and our largest initial check has been $5 million. So we see ourselves, we call it late venture, early growth. So we're typically not the first capital in, but we're soon after that capital, what is often described in the venture industry as sort of Series A, Series B. So these are businesses which have typically taken their product to market, have already established a product market fit. They've got customers, and they're now looking to raise capital to hire more team, build out more of an engine for growth. And that's what we look to back. And I mean, in terms of the criteria that we use and our investment selection process, there's quite a lot that goes into it. It's a lengthy process. As I said, we're entering into a long-term partnership with the entrepreneurs. So we take our time and really get to know them and before making that decision. But key things that we look at. So we are a climate impact motivated fund manager. So we're looking to invest in businesses that are going to have a significant climate mitigation or climate adaptation impact. So on the mitigation side, that's a company that has a product or a service that displaces a traditional or a fossil fuel, thereby reducing the CO2 impact or the CO2 footprint in a particular sector. So an easy example, actually an example that you offered earlier is around the cook stove space. So still many households across the region use biomass stoves, which are pretty inefficient. So they're using firewood and charcoal. And we invest in businesses that have biogas, improved biomass, biofuel, cook stove technologies that are able to displace the incumbent products and reduce the amount of deforestation that typically needs to happen in order to fuel the existing stoves. So that's on the mitigation side. And then we're also, because Africa contributes only 2 to 3% of the world's global greenhouse gas emissions, but it stands to really bear a disproportionate burden from climate change. And so we're now really looking to invest in adaptive technologies. So solutions that help communities, individuals, and also small businesses to adapt to climate change. An example of that would be in, say, solar powered irrigation, which helps farmers be more resilient to droughts and lack of rainfall, because it then enables them to use solar panel renewable power to pump water and have water to feed their crops even when there's no rainfall. So really strengthening their ability to produce and therefore to generate income even in a period of drought. So we're looking really at those two things. Like, does this business have a significant mitigation or adaptation impact? That's on our kind of climate focused lens. And then I would say a lot of the things that we look at are quite similar to other venture funds that you'll speak to, such as really when you're investing early stage, you're backing people and individuals, like the team. So we spend a lot of time assessing the experience and capacity and intent and expertise of the management team. We typically like to back teams which are composed of multiple founders rather than just a single founder. We find that the companies with multiple co-founders tend to fare better. We're also looking at, ideally, these founders will have a background in the sector that they've set up a business in, possibly even have started one or more companies in the past. So they've got that experience and know what it takes to take a product from the page, from concept to into the market and iterate and build out a business. So that's really critical, ability and capacity of the team. And then we'll look at whether the product or service that the business is selling actually has a market. Is it tailored to the markets and the customer base that they're trying to sell to? Does it solve a real world problem? And what's the feedback from customers like? So we will typically go out into the businesses market and talk to their customers and ask them about their experience of using the product and try to understand what problems it solves. And that ends up being a really key input to our diligence on the investment. So in terms of the process and the timelines, we're constantly trying to improve on this. We know that in the region, investment processes can be too long, especially as companies are under financial pressure. It's a tough macroeconomy at the moment. So often businesses need to raise quickly. So we try to be attuned to that. And our typical process runs at around 4 to 6 months. And we go through financial, commercial, legal due diligence. We, as I mentioned, have a lot of meetings with the team. We don't just meet the management team. We like to meet mid-level staff and some of the more junior staff to try and get a bit of a 360 sense of the company. And then we'll talk to some of their key partners. So that could be their customers, could be suppliers or financing partners on the debt side. It really depends on the business. And so we try to run through to a maximum of 6 months until we're fully closed and we can send them the check and they can start investing the proceeds into growing their business.
Thank you very much for sharing. That was quite insightful. Really appreciate that. You've traveled across different markets. And what lessons can you share from a technology perspective and from traveling across the markets that you've traveled on the continent and abroad?
Yeah. No, it's a really good experience. In terms of technology, do you mean technology as an enabler? What do you have in mind when you're asking about the technology? Just
yes.
so clear.
No worries. So basically, we've spoken about, so I'll ask the question again though, but we've spoken about you're already playing in the tech space, right? But what is something that is not in your business model, right, that you have seen having impact, if any, right? Or just your basic travel lessons, whether from outside Africa or from Africa, that you think you can share some lessons from. So it could be just something that you learned. Maybe it could even be in Kenya that you found to be interesting, but just a travel lesson, because the idea is a lot of people look at Africa and think that you can operate without traveling. It's not as easy as it is, because the assumption of Africa being the same, especially for those that are coming from outside, and and the reality on the ground is a bit different. So anything to share around that?
Yeah, that's clear. Maybe the first thing I'd say, especially as we've emerged from the COVID period, where a lot of the diligence and the getting to know partners and potential investments was happening virtually. One thing which has suddenly become clear to me coming out of that period is how much we missed in terms of meeting face to face with entrepreneurs, with investors. There's really a huge piece which is lost when you're just conducting all of the conversations digitally. So I would say having those face to face meetings, especially when you're investing on the equity side over a long term, this really is a long term partnership, is really critical. So I think traveling for that purpose should be a priority. The second thing I'd say, and I think you were alluding to it there, is just Africa really is a very diverse continent, and one market is typically really different from another, both from a cultural point of view, language, but also political and environments differ significantly from country to country, and even within the sub-region of the continent. So you need to invest time to get to know each market. And to be honest, this can be a challenge for early stage companies, because typically they're looking to expand into a few different markets, and it's not just a copy paste, as some who aren't that familiar with the region might expect. There's a lot of market entry preparation and nuance that needs to be figured out in order to be successful, say in Kenya and in Nigeria at the same time. So I think that's something that's important to be aware of. In terms of insights from markets outside of the region, I think one thing that I can continue to learn from is looking at trends in other emerging markets. And I think in particular for Africa, looking at South Asia and Southeast Asia in the sectors that I invest in. So renewables, the ag tech space, those markets have, at least in the last decade or two, tended to be a little bit ahead in terms of the size of investment, size of market, and the amount of capital going in. So it's been really helpful to look at some of the trends and see which might be relevant for African markets. Again, it's not a copy paste, and companies that try to do that tend to fail. But it's more looking at what relevant insights can be extracted for the African context. And I think there are a lot of opportunities for technology transfer into the continent, but also increasingly we're seeing business models migrate from African markets to other regions. So in particular in the fintech space, so SME credit type models, we've seen that a lot. We invested in a fintech business that lends into the energy sector and also now into across other real economy sectors as well. And they started out lending to African SMEs and to let other lenders into the SME sector. And they've now expanded into Latin America and into Asia, which is really great to see. So this was a business that was really founded in Africa, put its teeth in the African market, and has now taken those lessons and moved into other emerging markets. And we're also seeing opportunities in the nature-based solution space when it comes to climate change, where Africa has tremendous of natural assets, so forest, and it's a really promising hotbed for some of the solutions that look to sequester carbon from the atmosphere and store it. And so we're seeing a lot of innovation that we think can be honed and developed here and have a lot of impact on the continent, but then importantly be exported to other regions across the world. And so that's really exciting actually to see.
All right. So Marcus, what are the top 3 deal breakers or top 3 factors that would motivate you to invest?
Yeah, I'm just thinking which angle to take. Should I take the deal makers or the deal breakers? I tend to like to be positive. So let's maybe say, what are the key factors that would motivate us to invest? I think one is team. And I did mention this before, but having a team with a vision that they can communicate, that captures the attention, and also a clear plan for how they're going to bring that vision to life through some of the more kind of practical things in terms of growing their business. Secondly is solving a real world problem, i.e. they have customers who are sharing positive feedback about what the business is doing. Like ultimately, that's the best feedback an investor can get, can go straight to the customers and find out what their experience of engaging with the business is. And then thirdly, on the climate side, just they have the potential to really move the needle on the climate crisis with a mitigation and adaptation impact. So I'd say those are like the top 3 things that would motivate us to invest. In terms of deal breakers, I think I would probably say if the company doesn't have positive unit economics or a clear pathway to achieve them, that is a concern, because ultimately businesses, especially in this region, I think there's even more of a focus on sustainable growth as opposed to just growing top line without the unit economics that support it. So we need to see the company has a close handle on their cost base, and that they're able to produce and sell and distribute whatever it is that they're doing in a way that's profitable. So I think that often ends up being a deal breaker for us. The other point which I might mention, and it's not a complete red line, but it's around dependence on government procurement and regulation. One experience that we have, and having been in the market for decades, is that businesses that are only selling to government, or where the majority of their business is selling to government, have struggled. So I'm thinking of maybe businesses, for example, that sell energy only to government utilities across the region, or that sell software into the health sector that's only focused on the public sector, healthcare sector. These procurement processes can often be quite opaque and also quite long. And so we've seen a number of companies that we were tracking crash and burn because they're waiting for some of these big government contracts to materialize. Or they do land the big government contract, but then the government changes, there's a new regime, and they cancel the contract, or perhaps they go ahead, but then there's problems around payment. So I do think we like to see a good mix. If it is a business that needs to sell to government, we like to see a good share of their growth plans coming from selling also to private sector as well, because of some of the risks. That's something that we've seen really across all of the sectors that we've invested in.
Interesting when you look at government involvement, especially in Africa. So thank you very much for sharing those insights. And for those that will be looking at Africa, you're the first one in our episode who has mentioned government. So whilst it's a deal breaker, it might seem to be a negative, but it's also a positive, because when you know what to be aware of, I think that will also have a positive impact. So thank you very much for sharing.
Yeah, and I think, sorry, let me just maybe say, I don't want the message to be that Marcus or Kawi Safi is doesn't want sort of businesses that are partnering with government. That's not the case. I think it's more just given some of the risks around timeline, around securing contracts and payment, it's more having a natural hedge baked into the business, just in case some of those risks do materialize. And that's what we counsel entrepreneurs who are in these types of sectors.
And certainly, based on my experience as well, there's every 5 years, there's either a change in leadership. It might not be the top of the government, but when there's a change, usually in different African countries, there might be something that might end up delaying what you're doing. So without yourself understanding what that could mean, a delay of 6 months or 12 months can be quite impactful to your business. So certainly very important that you mentioned that. What insights or investment insights would you share with someone in the international investor space or African diaspora seeking to invest in Africa? One or two?
I think I'll come back to a point that sort of I mentioned a bit earlier, which is just do some diligence. And that often will involve traveling and coming to market, meeting with different actors within the investment ecosystem, other co-investors and different companies, just to really develop a base which enables you to form your own opinions. So I think that's one thing. Second is align yourself with other networks. And there's some really good angel investment networks now emerging, including sort of diaspora investment groups as well. So try and find other like-minded investors and share some of the work and the cost of kind of building your knowledge base and doing the diligence. So you're stronger in a group rather than on your own. And typically that we apply that approach also with our investments. We like to invest alongside others. Often businesses take a bit longer to scale in Africa because of some of the operational challenges. So they tend to need further support once you've made your initial investment. And it's great to have other investors at the table who can also back the business with you. So you're not the only one. And I think that applies also to new investors into the region. So I'd say those are some sort of entry points that I would advise.
Thank you. And would you have any one or two networks that you would like to share that we could put on our show notes?
Yeah, I'll share. I don't have the names to hand just now, so I will share the names afterwards because I don't want to get them wrong either, so that you can add them to the notes. But no, I'd be happy to.
Okay, perfect. I will do that. Any book or podcasts you'd like to recommend to our listeners?
Yeah, this is a good one. There's some good podcasts out there about Africa VC. I think again I'm going to butcher the names, so I will have to share with them afterwards. I have a really bad memory for these types of things, so I will share afterwards. On the climate point specifically, I will give a reference. Let me just pull up the names here. There's a few kind of climate venture capital type newsletters that I subscribe to, and so I get emails. One is Climate Tech Venture Capital. So that's the acronym is CTVC, and you can subscribe for their network. Another is called Capital for Climate, and I subscribe to their climate investment newsletter. So that doesn't just cover Africa, it's really global, but there is a strong emerging markets focus, and that's a great one to keep up to date on the latest climate trends. And the final one is called Carbon Brief, which again is a weekly newsletter, and I follow that. So yeah, on the climate side, I have the names to hand, but on Africa VC, I'll follow up with the names.
Perfect. Thank you, Marcus. To support our show, please leave a review and share this episode. You can also connect with us on social media using the handles in our show notes, or visit our website, scixpodcast.africa. See you next time.